good news for some homeowners this morning. If you have a home loan with Bank of America, you could get your loan reduced by up to $100,000. Financial analyst Clyde Anderson is here to tell us more about this. So first of all, Clyde, good morning.
Good morning.
Why is Bank of America doing this?
Well, this is part of a big lawsuit. This is a settlement. They've pretty much worked a deal out that they can go ahead and reduce these mortgages as opposed to paying back all the money that they were having to pay back from this big lawsuit, this $26 billion lawsuit, from doing fraudulent things as it relates to foreclosures and some robo-signing, and a lot of things were going on to hurry up and move those foreclosures along. And so they got slapped on the wrist for it. Now, this is their way to kind of pull back and have some resolution.
So it's a side deal that they made to reduce their own penalties, right?
Exactly.
It's not out of the kindness of their heart.
You got it. You got
well,
it.
but it is good for some people.
Yes.
So how's it going to work and who benefits?
Well, pretty much what they're saying is that they can reduce the mortgages. Everybody's talking about they're underwater in their mortgage. So what they can do is reduce the amount of the mortgage down to the appraised value of the home. So, for example, if you have a $200,000 home and it's only appraising at $150,000, they'll reduce that loan down to $150,000. So what it does is it helps out your payment, as well as if you want to sell the house or do something different, you're not so much underwater where you're going to owe more money.
So we have this graphic up
Yes.
so our viewers can follow along with us. So there you have it. If you owe $200,000 on a home that's worth $150,000, so your monthly payment's going to go down, right?
Well, actually, right now they show $954 at that $150 mortgage. It'll go down about almost $200 really with the difference. So you say that same $150,000 at 4% interest rate, your new payment's going to be $716. So it's saving the homeowner from the payment side, but it's also saving them as far as not being so far underwater.
And how do you qualify for something
Well,
like
pretty
this?
much you have to be behind on the mortgage. It has to be an owner-occupied residence the time you took it out. And it has to be an owner before January 2009. It's January 1st, 2009 when you took it out. And you got to be current on your mortgage payment. And those are really the same things. And you got to be underwater. That's the big piece. You got to be underwater. You have to owe more on the house than it's actually worth.
Well, there's plenty of those people who are underwater.
Yes.
And this is really all designed to help motivate those who are underwater to keep paying, right?
Exactly. They don't want them to have those foreclosures on the market. They don't want people walking away. And that's what was happening. A lot of people are just walking away. So hopefully this will be an incentive to get them to go ahead and stay in the home.
And will this make a dent? I mean, we have a lot of foreclosures out there.
Well, you know, they say there's about 11 million foreclosures out there. This should help about 1 million people. So we say, you know, anything helps a little bit. We'll take the dent.
I like your positive attitude. We'll take the dent. All right, Clyde, always nice to see you.
Pleasure.
Thank you very
Pleasure.
much.
Bye.